Is Bitcoin on the brink of becoming a global reserve currency?
Absolutely. Today we're unraveling insights on pivotal economic changes that could impact us all.
Welcome to Financial Insights in Minutes. We provide you quick summaries of the day's vital financial news.
We aim to keep you well informed without wasting precious time.
In today's video, we're summarizing critical discussions from leading experts about Bitcoin, the Fed, and more. Welcome to Kitco News. Today, we're diving into the world of capital rotation due to the Federal Reserve's anticipated interest rate cuts. Hold on to your hats, because it's about to get interesting.
Absolutely. Our return guest, Lyn Alden, is here to break all of this down with her sharp insights and solid credentials. She'll explain what these rate cuts mean for Bitcoin, gold, and more.
So what's at stake with these Federal Reserve rate cuts?
Lyn argues that the shifts in interest rates will likely lead to foreign investors pulling capital out of U.S. markets. This capital rotation could reshape asset allocations across the board.
What kind of fireworks can we expect on the trading floors as the Fed prepares for cuts?
The market seems to have already digested this info, pricing in a small cut. Major movements hinge on how surprising the Fed's decisions are.
Let's talk about the emerging markets. What's on the horizon?
Emerging markets stand to gain from a potential outflow of capital from U.S. markets. Investors may seek better opportunities as the cost of borrowing and returns adjust.
And what about the price of Bitcoin?
Lyn highlights that if global liquidity remains positive, Bitcoin could not just breach, but certainly exceed six figures.
So, as we look ahead, what are the potential risks or opportunities?
Absolutely. Factors like geopolitical instability can push investors to reconsider their strategies. The key will remain in monitoring liquidity changes.
What are Lyn's expectations for the rate cuts?
Lyn predicts a properly navigated rate cut cycle, suggesting it won't have the expected impact on the overall U.S. economy.
What's in store for Bitcoin?
With positive trends in liquidity and economic conditions, Lyn sees Bitcoin pushing into the six-figure territory.
So what's the big takeaway today?
As we wrap up, it's clear that capital rotation from the U.S. could drive serious changes in investment strategies. We expect significant impacts across numerous asset classes.
Any final thoughts for our viewers to ponder?
Absolutely. Keeping an eye on economic signals is crucial. Flexibility and vigilance can lead to diversified, strong investment strategies.
We want to hear from you. What's your take on all this capital rotation chatter?
Let us know your thoughts in the comments below. Your perspectives can shape the conversation around these pivotal financial trends.
Welcome to Eurodollar University. Today, we're diving into a huge topic, Germany's economic crisis and what this could mean for the global economy. Is this just a local issue, or are we all in the same boat?
Right, Germany is in a tough spot, and it sounds like it's not just the Germans that should be worried. Clemens Fuest from the IFO Institute sheds light on how intertwined our economies really are.
So what's the core issue here? Why is Germany facing this crisis?
The crisis stems from a combination of factors, including a weakening U.S. economy and synchronized global downturns. It seems that Germany, already in a recession, is experiencing worsening conditions rather than any signs of recovery.
Let's break down the key points. Starting with current economic indicators, what has the data shown?
The IFO reports a notable decline in their business climate index, signifying that manufacturers are losing confidence. They're not just unhappy, they're seeing actual drops in orders.
What about the global influences affecting Germany?
Exactly. The crisis isn't isolated. It's exacerbated by concerns around the U.S. and China's economic performance. If they sneeze, Germany catches a cold. For real.
And what can bond markets tell us?
The steepening of Germany's bond curve signals that the market anticipates lower interest rates. This isn't good news. It suggests prolonged economic hardship ahead.
Now, let's look at some predictions. What does the future hold for Germany?
If these trends continue, we could be in for escalating economic problems, including declining consumer confidence and rising unemployment. It's shaping up to be a bumpy ride.
What about central bank actions? Any predictions there?
The ECB might go for another round of rate cuts, but as we've seen in the past, such measures often lack the intended effect. It's a sticky situation.
To wrap it all up, what are the key takeaways for viewers?
The situation calls for robust economic strategies. Germany and Europe need focused efforts to deal with these serious challenges. It's crucial for not just Germany, but the global economy.
And we want to hear from you. What are your thoughts on future economic policies for the EU?
Drop your comments below. Your opinion matters as we navigate these turbulent economic waters.
Welcome to Thoughtful Money. Today's deep dive is all about the alarming truths behind U.S. debt, as revealed by the brilliant Dr. Lacy Hunt. Hold on to your hats. It's going to be quite the economic roller coaster.
Indeed, Dr. Hunt unpacks the grim reality of national savings, fiscal mismanagement, and how neither presidential candidate has a credible debt reduction plan. Prepare for unfiltered insights.
So what's the bottom line of Dr. Hunt's interview?
The core message is that the U.S. is witnessing a decline in net national savings, 5 consecutive quarters, in fact, while both political parties are promoting policies that will only exacerbate the existing debt crisis.
Let's break down those key insights, beginning with saving.
Dr. Hunt highlights that we now have net national savings falling to alarming levels, negative $1,500 billion. The last time we saw this was during the Great Depression.
And what about government spending?
Both leading candidates propose increasing the national debt even further, with no clear strategy to rein it in. We're in a dangerous loop.
Now let's tackle inflation.
This inflation situation is compounded by fiscal policies, which may intensify pressure on everyday Americans. It's the law of diminishing returns.
What predictions does Dr. Hunt offer about the economy?
Well, he predicts that without substantial changes, the continued trend of negative savings may culminate in another recession. It's too dire to ignore.
To sum it all up, what's our biggest takeaway?
Action is needed. Dr. Hunt emphasizes the importance of realistic fiscal policies that can effectively address the deteriorating debt situation.
As we wrap up, let's consider, how will the national debt issue evolve as we approach the election?
Drop your predictions in the comments. This conversation is just getting started.
Welcome to the Trade Brigade Midweek Show. Today, we're diving into Nvidia's recent earnings report and what it means for the market. Spoiler alert, it might not be all smooth sailing.
That's right. Although Nvidia beat expectations, the details left investors with more questions than answers. Stay tuned as we break it all down and share 2 exciting trade ideas.
So what's the main thesis today? Why are Nvidia's earnings causing a ripple across the broad market?
Despite Nvidia beating earnings, the market reacted negatively. Concerns regarding growth momentum and margin declines overshadowed the earnings beat, making investors cautious.
Let's break down the key points from Nvidia's earnings. What's the scoop?
Nvidia reported strong earnings, but growth forecasts were concerning. The decline in gross margin signals potential challenges ahead and raises investor concerns.
And how did the market react to this?
The stock dropped 3% immediately after the report and dragged the broader market down with it. They say when Nvidia sneezes, the market catches a cold.
What about trading? Are there opportunities on the horizon?
Absolutely. If Nvidia defies expectations and rises to key resistance, it's worth looking at long positions. Otherwise, shorting might be your best bet as the trends show downward potential.
What are the predictions moving forward?
Expect increased volatility. As traders react, profit-taking could drive further downward movement across the markets.
Any thoughts on sector impacts?
Definitely. We could see tech weakness spreading to other related sectors. Investors might shift to safer bets amid the uncertainty.
So, what do we conclude about Nvidia's earnings?
In summary, while Nvidia's report wasn't a total disaster, it marks a critical juncture for traders. Play it safe while exploring the potential opportunities ahead.
What strategies should traders consider right now?
That's up to you. We'd love to hear your strategies and thoughts on the market. Be sure to comment below, and let's keep the discussion going.
Welcome back to Figuring Out Money. Buckle up as we navigate the tumultuous waters of market changes. Today, we're diving into the latest happenings in the stock market. Just how volatile are things getting?
Absolutely. We're on the verge of a big shift, and there's a lot to unpack. With rising volatility and changing market conditions, it's a crucial moment for traders. Let's get straight to the facts.
So, what's the core thesis we're examining today?
Right now, the VIX suggests a possible consolidation phase or even a pullback in the S&P 500. This volatility index often signals changes, and we're getting close to a pivotal moment.
Let's dive into the nitty-gritty. How did the markets fare today?
Nearly all sectors faced declines, with tech taking the brunt of it. The Nasdaq led the downward charge, reflecting investors' cautious sentiment.
What about the recent earnings reports? How are they influencing market trends?
Nvidia reported mixed results, which has rippled through the markets. Earnings reports can heavily impact stock performance, and Nvidia's volatility is indicating possible changes ahead.
Looking ahead, what do the expected moves tell us?
Traders must brace for daily expected moves reflecting heightened volatility. Anticipating sharp movements can make or break trading positions.
Now, let's look into predictions. What should traders anticipate in the coming days?
A correction seems plausible given current conditions. Traders should closely monitor post-earnings reactions, especially from major players like Nvidia.
And on the flip side, do we foresee any recovery?
Absolutely. If key stocks like Nvidia rebound, we could see positive momentum shift back to the markets. Keeping an eye on these developments is vital.
So as we wrap up, what's the main takeaway?
Keeping tabs on market changes is key. With conditions shifting, mitigating risks and seizing opportunities can be the difference for traders. Let's stay sharp.
We've discussed contrasting perspectives from our experts regarding the future of Bitcoin and broader economic implications.
While Lyn Alden paints a brighter picture for Bitcoin's potential, Lacy Hunt offers a more sobering view on U.S. debt.
Equipped with these insights, staying informed can help us navigate these unpredictable markets.
Thanks for watching, and remember to join us next time on Financial Insights.
Like and subscribe. If you have ideas, thanks for watching Financial Insights in Minutes for August 29th, 2024. If you found this time-saving content useful and want to support the channel, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.